Financial inclusion. This has been the overarching goal of every microfinance organization, and yet in 2020, this goal seems to be out of reach. So, how can the Manila Microfinance Foundation operate in this new era of financial inclusion? Good afternoon, ladies and gentlemen, and welcome to our presentation brought to you by Coldstream Consulting. My name is Sakalan, and I'm joined by my colleagues Stephanie, Winston, and Susanna. The Manila Microfinance Foundation has been challenged by the COVID-19 pandemic and are struggling to rebound and meet their long-term goals. This problem has resulted in two key immediate challenges, the first being a limited product range and liquidity problems, and the second being an outdated operating model that is hindered by physical restrictions. In response to these challenges, we have developed two key strategies focusing on business growth and telephone banking services. In the first strategy, if MMF can refinance debt in the short term while keeping default rates below 1%, they will be able to introduce new financial products like micro savings in order to drive business growth. In our second strategy, in order to innovate, MMF should offer telebanking services within the next 6 months so that they can overcome physical restrictions. They will also be able to increase accessibility to their services through both landline and telephone banking and mobile banking. Ultimately, this strategy will result in 2.5 billion pesos in deposits within the first 12 months, 148,000 borrowers by 2021, and 3.8 billion pesos in annual revenue by 2025. It is also important to note that the COVID-19 pandemic has completely disrupted the Filipino economy, with the economy likely to contract by up to 3.4% during 2020. However, the Philippines' strong macroeconomic fundamentals and the 2.8 trillion pesos in government stimulus mean that the economy is expected to recover by 2021, with expected GDP growth back up to 7.6%. Therefore, MMF, as an established brand with over 100,000 borrowers, has a unique opportunity to help facilitate a post-COVID-19 recovery if they can survive in the short term. Furthermore, the GFC has taught us how a microfinance institution should operate in the first 6 to 9 months of a crisis. Maintaining liquidity and client confidence are critical in order to ensure that MMF survives and continues to facilitate financial inclusion. Furthermore, evidence from Bali during the GFC shows that by taking on deposits, MMF will be able to will be insulated against refinancing risks and have much stronger long-term growth potential. In response to the COVID-19 challenges that MMF faces, we have proposed two key strategies. The first strategy is around business growth, which prioritizes liquidity in the short term and creates a new credit risk assessment model that will reduce default rates below 1%. MMF can then leverage this to introduce new financial products like micro savings in order to drive business growth. The second strategy focuses on telephone banking. In order for MMF to successfully deliver telephone banking, we suggest they partner with BDO Unibank and Gcash so they can create a streamlined telephone banking process. A critical aspect of this overarching strategy is that it will create outcomes that align with MMF's long-term goals, such as increasing their client base in Mindanao by 145,000 people, as well as having 70% of their clients be female. Furthermore, this strategy will also solidify MMF's fundamentals, with their balance sheet becoming stronger, with 2.5 billion pesos in deposits by 2021, which will eventually grow out to 9.2 billion pesos by 2025.
MMF needs to remain liquid to continue supporting low-income communities, especially during these troubling times. MMF's new micro savings products will enable them to maintain the liquidity into the long term, insulating themselves against future market shocks. However, it is crucial now that MMF focuses their efforts on surviving the current liquidity crunch to enable those long-term operations. MMF can sustain the operations using three methods. 1, exchange the existing debt for new debt securities with financial terms that better suit the liquidity needs. 2, swapping the existing debt for equity instead. And 3, most importantly, they will maintain client confidence by redesigning the credit risk assessment model to reduce the default rates. The improved model uses evidence-based loan and borrower characteristics like the business sector or the number of loans they've had to classify portfolios into either high or low risk of default. Those that are high risk will be restricted from future borrowing, but allowed an interest discount to enable on-time repayment. Those identified as low risk will enjoy an extended loan term and be provided access to new borrowing. This will help MMF identify risky portfolios and thereby reduce default rates. MMF continues to hold the responsibility of bridging the gap to financial inclusion for both the current clientele as well as a new, previously unreached client base. By providing formal savings accounts, they can increase access to secure banking for the high proportion that remains unbanked. Clients will also be supported in creating savings goals in order to facilitate ongoing savings behaviors and increase the average annual savings. We recommend that MMF form 2 partnerships, firstly with BDO Unibank and secondly with Gcash. These companies have leading experience and expertise and extensive reach in areas that MMF already services, making the switch to telebanking faster and thereby increasing accessibility to its services. We recommend that MMF focus on providing the highlighted offerings. Microsavings accounts not only increase access to secure banking and increase financial decision-making powers for women, but they also provide MMF with loan collateral and access to funds. And with the Philippines government shifting the focus to food security, micro-agricultural loans should be provided to target Mindanao's large farming community, seeing as they currently make up 50% of the clients in Mindanao.
For the second key strategy, MMF needs to shift towards a telebanking process within the next 3 months so that clients can be reached via mobile phone or landlines. This minimizes the risk to MMF employees, especially field officers, as most transactions can be completed via telephone. Additionally, this strategy also recognizes the fact that many disenfranchised low-income Filipinos do not have a mobile phone and may use a landline instead. Let's take the example of Anna, a store owner looking for a loan to buy a profitable vending machine. By undertaking 5 simple steps, Anna can apply for loans and savings through either text or calls from a phone, instead of the traditional process whereby she would have been forced to liaise with the field officer as her sole point of contact. Furthermore, to make her life easier, Anna has several options to withdraw her money. MMF sends the loan to her main account, which can be withdrawn physically via one of MMF branches or transferred electronically into a Gcash wallet. If neither of those options are convenient for Anna, she can also withdraw the cash from a local vendor partnered with Gcash. To maximize the benefits of the telebanking process, MMF will leverage the unique strengths of its partners. Its partnership with Gcash and their local vendors will increase accessibility to Filipinos who could not be previously reached. Partnering with BDO will enable the telebanking process to offer more tailored services. And given the strong brand recognition of the 2 partners nationally, these partnerships with Gcash and BDO will in turn increase MMF's brand awareness within the Philippines. To overcome potential challenges that may arise in the first 6 to 9 months, such as a lack of awareness and long travel time, we advise that MMF initially drive demand by leveraging its existing customer base and partnering with the government so that fast-tracked social welfare payments become a well-known feature of MMF's telebanking process. To ensure new customers continue with MMF in the long term, a help desk that not only answers queries, but also offers a step-by-step guide on how to use telebanking services should be established. Consequently, within the first 9 months of telebanking, MMF will see a 20% increase in the number of female clients who have not used banking services before, and up to a 30% decrease in distribution costs of loan services.
We've identified the 4 most valuable KPIs to ensure our strategy increases repayments for liquidity, takes on deposits, achieves strong telebanking adoption and long-term portfolio growth. So in the short term, we aim to reduce default rates to below 1%, allowing us to receive 2.5 billion pesos in deposits, reach 97,000 savers and 96,000 telebanking clients by 2021. Overall, resulting in a long-term portfolio where 70% of our clients will be female and 50% will be from Mindanao. In terms of implementation, our focus in the next 3 months will be on maintaining liquidity, establishing our partnerships, and launching microsavings. Telebanking will then be trialled in Luzon in December and then officially launched in 2021. So 2 major risks which we have identified that will affect MMF in the next 9 months include KYC regulations and requirements and mobility restrictions, limiting telebanking onboarding and cash transaction points. To mitigate this, we will be using Gcash's current KYC security checks for new users until the new national ID system is fully available, and we will leverage our partnerships with BDO, Unibank, and Gcash using their agents and branches to increase access points. So in conclusion, our 2 strategies focus on maintaining liquidity and implementing telebanking, not only addresses MMF's immediate COVID-19 issues, but also facilitates financial inclusion by addressing the current needs of the Filipino community. So going back to Anna, who is struggling to keep her business afloat during the pandemic, now discovers MMF through her local Gcash vendor. She can now access MMF's telebanking platform to quickly access a loan, allowing her to pay off her expenses to ensure her survival for the immediate future. MMF then also encourages Anna to save, overall making Anna more financially stable in the long term. By addressing financial inclusion, we also address MMF's key values, inducing a 20% increase of unbanked women into financial services, providing funds to 20% more clients in the Mindanao community, onboarding 148,000 low-income borrowers through new tailored products, and ensuring sustainable development with a default rate below 1%. Thank you for listening and joining us in the new era of financial inclusion.
I might kick things off with a question. Thanks very much for your presentation. The idea of partnerships is really exciting, but I guess two questions on this. One is, how did you select those two partners for MMF? And second, what value does MMF add to that partnership, given the reliance on the partner's services in the model you've described?
Thanks for your question. So perhaps I can answer the first part, why we chose those partners. So if let's first go to BDO. BDO Unibank is it's the largest private banking network in Mindanao, and we know that MMF wants to target clients in Mindanao, so that's why we chose them as well. And we also chose them because they have shown an interest in microfinance, but they actually haven't developed any microfinance products. If you look at their website, they only offer savings and deposits to more middle-class citizens. The reason why we chose Gcash, well, we looked at previous case studies, and they have shown that success with telebanking process requires a partner who can provide electronic or telephone services. In this case, Gcash here, we wanted Gcash because they have a increasing outreach towards Filipinos, and they also are the biggest mobile platforms for Philippines. The second part of your question, what values can we bring to Gcash and Unibank? Well, first of all, the fact is that Gcash and BDO don't actually serve this segment of clients, the clients who are undergoing a lot of hardship and are usually the lower class of Philippines. And so we believe that by providing MMF as a partner, we believe Gcash can increase their users by 1.08 million, should I say, and BDO will increase their outreach by 1.5 million. For BDO specifically, we believe that we can bring our expertise in microfinance to their interest, and we can combine the two to help them if they want to develop a product in the near future.
And to build onto that, what are the contingency plans if these two partners don't, something falls through with the partnership? What are the alternatives?
So the alternatives here, well, the telebanking process does rest on the fact that Gcash and Unibank does partner with us. The contingency plan here would have to be, we would have to look at other partners in this case, but for telebanking process to work, such as in Nigeria and other microfinance companies, they have always needed a partner in this case here.
And sort of just to build on Winston's answer there, so for strategy one, MMF can still implement the micro savings products themselves. There'll just be a decreased outreach. So there's still, we've established a strong business case for the reason why the partnership would work, but there's also a strong business case for their current products, introducing those new products themselves. They'll obviously benefit MMF. It just means that there'll be a slower rollout on the impact. It will just take a little bit longer to get to where they want to be. Those partnerships are really just an enabler for a bigger part of the strategy. The same thing goes for telephone banking. What Winston was saying earlier, that a partnership with a bank really ensures its success, it maximizes the chance of success. However, MMF can still go at it alone. They'll just be, their chances of success will just be lower than that. However, it is still necessary, as we mentioned during our presentation, because this is how they can go forward in this new era of trying to operate in the COVID-19 environment.
I have a question regarding what seems to me to be a key part of your plan, which is to lower default rates. And one of the strategies I think you mentioned is that you want to, so for customers who are underperforming in terms of their repayment, you want to restrict the number of products that are offered to them. And I'm wondering to what extent that specific part of your plan conflicts with the overall mission statement of this, essentially a social business, because they want to promote financial exclusion, gender equality, and community orientation. So if a key part of your strategy is limiting products to underperforming customers who are likely to be perhaps the poorest among the community in Philippines, are you telling this organization that they must compromise on their mission statement in order to survive and move forward through the pandemic?
Yep, so that's a good question, and I'm more than happy to answer that. So I think it's really important to understand that in the short term as well, it's about maintaining client confidence and liquidity. That's what we established from numerous case studies from the GFC. And it is important to understand that restricting borrowing is only in the short term, while MMF is able to avoid the liquidity crunch, and those constituents are able to potentially repay their loans. One critical thing we noted was that for microfinance institutions during the GFC, it was more important for them to continue with their business model rather than decrease client confidence by providing relief for loans, because that just meant that it created a mindset within their client base that they wouldn't necessarily have to repay loans in the future, and that really destabilized their business model. So in this case, while the overall goal for MMF is still to facilitate financial inclusion, that portion there where you're restricting borrowing is critical to ensure that they can continue doing that in the medium to long term. Because if they don't maintain that client confidence by setting standards, then the case studies that we've studied around the GFC have shown that microfinance institutions tend to typically do poorly and sometimes go under as well, because their client base just doesn't trust in them to anymore.
A quick question on timelines. I noticed that the timeline stated you're focusing on the next 12 months. Now, what do they do after that, and how does that get them to their 2025 objectives?
So thank you for your question. So in terms of the timeline, we've only identified it up to the first 12 months because right now in the short term, the key idea is just making sure MMF survives the COVID-19 pandemic. That's why the first 3 months is focused on mainly business growth. Then after that, it comes the implementation of telebanking, which will actually assist with the idea of financial inclusion. So this not only because of COVID-19 and the idea of fast-tracking financial inclusion, telebanking actually increases access to our clients by giving them the ability to actually access them in more remote areas. So for example, our Mindanao clients will be able to access financial services better. And in terms of the next, extending past the 12 months, the risk assessment model and the micro savings will actually help increase the amount of women into our financial services, because from case studies, we've seen that a lot of the clients we're expecting to onboard will be from Mindanao, and 80% of those, or a large population of the clients in Mindanao, are actually female clients. So that will address their 75% goal for onboarding women, and the increased access to financial services through telebanking will address the 50% goal of Mindanao clients.
Thank you. So do you think post the 12 months and all these actions are taken, assuming all the partners of course come on board, do you think the growth post that then will be organic, or are there any actions that you would need to take in order to accelerate that?
Yep, so I'm more than happy to answer that question. So yeah, these first 12 months are the most critical for MMF, especially because the industry is sort of in free fall. The microfinance industry is in free fall. So that's why we focus our implementation timeline on those first 12 months. And in terms of how they would continue to grow, in a sense, the continued partnerships with BDO, Unibank, and Gcash are key factors in accelerating the growth. So if you want, Susanna can take you through our financial model and show you the growth there. But it'll be more after we've implemented these key steps, it'll be a natural growth because we have all these enablers in place, such as telebanking and new products.
Okay, thank you.
Quick question on the liquidity side of things. What would need to hold true in your assumptions for MMF to survive COVID? Because you talk about debt restructuring, you've got this little timeline here of September. Like what needs to hold true for this, for you to survive to then be able to do all the rest of it, these initiatives?
Yep. So we have identified how the debt restructuring would work. And I know we're running short on time, so I'll just quickly jump onto that. So there's two key considerations, short-term survival and providing relief to financially vulnerable. So it's really important that MMF restructures debt in order to survive. And we've done a few case studies with actual clients, actual microfinance institutions in Nicaragua, and where they have restructured debt. And in terms of the people we take debt from, they'll have to take a small short-term loss in order for MMF to continue surviving in the long term. Because as you can see here, for example, with debt exchange, the terms of debt may be extended, and this will result in people we borrow from taking a small loss. But it's critical in the short term that survival is focused on, because that has really proven that has really been the key factor in ensuring that institutions continue on. And if we look at the case study.
Thank you, Sekala. Sorry, I'm just going to have to cut you off there.
Yep,
appreciate that. Thank you for the University of Sydney for that presentation. Judges, if you could just direct yourselves to your breakout rooms in the bottom right. And while we're doing that, during the breaks, we will actually be giving you everyone mini MMI presentations about the work we are doing, and we'll also take this opportunity to introduce our judges for tonight. So we have Han and Vander from our name sponsors in this competition, Kani, Laura from Deloitte Digital, Alex from McKinsey, and Dr. Rashad from the University of Melbourne, all of which this event would not be possible without. And even before this round, we have had representatives from our sponsor and partners serving in finals such as the campus finals, as well as the global heats, who are a great help to the competition. But for those onlookers, as I said, we will be giving you some mini intermissions and a bit of a description of the MMI process this year. So an introduction to GMCC, it was actually first run in 2011. We've had over 2,000 participants over the last 3 years, and we managed to surpass this greatly this year with over 200 submissions, which was an amazing feat. What makes GMCC different year on year is the fact that it is a live case, typically either with a live client, or if not with a live client, then on an issue that is facing real microfinance institutions. And that is something we have experienced this year through our clients, that is the Manila Microfinance Foundation. And we will be adapting all of the results from teams and their presentations and converting those into a comprehensive report at the end of this process. And one thing we always look to uncover throughout this whole process is the fact that this does encourage intervarsity competition through an extensive network of different university partners, which we will elaborate and thank on in the next stage. But first, we would just like to quickly introduce the GMCC key milestones. So as a result of this year's expansion, it was quite an interesting process to juggle with the domestic and international submissions. But one thing we've always taken pride in is the fact that every round was done with integrity, and every team was given and put into the best position to succeed. You can see the process there, and we're currently at the global finals. As mentioned frequently, this competition has been expanded very rapidly and very successfully across continents, expanding into North America as well as Asia. As mentioned, we had over 200 submissions, which is a record, and in a result of that, we do thank all of our partners. One thing that always has one thing that's consistent across all our partners is their values and their consistency of appreciation towards the effect that students can have when it comes to making a tangible social impact. And in that, I would just like to acknowledge all of our partners. And as you can see, there is a wide array of different organizations, from student organizations to faculties themselves. So a huge thank you to all of you for allowing us to present this opportunity to your students and give them the chance to create a notable impact within society.
In 1995, Manila Microfinance Foundation was established to empower the underprivileged. By 2010, they expanded across Luzon to today, where they have over 17 branches across the Philippines. In 2020, they were hit with the unpredictable, dominating, and daunting COVID-19. Hello, my name is Ali, and today I'm joined by my colleagues Dom, Sam, and Kio to explore strategies to ensure that they reach their long-term goals. MMF was a thriving entity with ambitious goals that have been stumped by the rise of COVID-19. MMF has faced liquidity issues, growing borrower delinquency rates, and trouble reaching loan recipients. we propose that MMF secure quick capital injection to endure the COVID-19 slump, improve internal efficiencies through innovation, and expand their product offering through greater bundle offerings. Recent regulatory loan moratoriums have presented clear threats to MMF's liquidity. Combined with government-enforced quarantine, MMF have faced reduced oversight into daily clientele operations, leading to an increase in borrower delinquency rates and created barriers to physically collecting repayments from clients. So how can MMF adapt to the challenges of the COVID-19 pandemic while improving their operations and growing to meet their long-term strategic goals by 2025? Past outbreaks and leaders have demonstrated a strong foundation to providing MMF with a pathway to success. Now is not the time to be bold, but MMF need to be realistic and conservative to ensure that long-term stability. MMF can endure these challenges through short monetary solutions, providing a quick capital injection. They can innovate their operational efficiency for that long-term strategic advantage and compete against these leaders to achieve the MMF 2025 initiatives. Today, we propose that MMF get that short-term liquidity fix, seek efficiency upgrades over the medium term, and strive for that long-term stability through capital injection, internal innovation, and building bundles. These will reach your 2025 initiatives and an MPV of 1.2 billion pesos.
The first component of our recommendation is capital injection, focusing on raising funds to ensure MMF survives the short-term liquidity crunch brought on by COVID-19. COVID-19 has presented a serious challenge to MMF, with government loan moratoriums disrupting inflows, while outflows such as wages and admin costs continue. With a subpar 58% loan reserve ratio, MMF is facing solvency issues if liquidity is not addressed. However, as we saw in Sierra Leone during the Ebola outbreak, microfinance institutions who weathered short-term storms can remain successful. To inject the capital needed to survive the short-term liquidity issue, MMF should access the recently announced government Fill Guarantee program, which is designed to help lenders in this exact scenario, offering to cover 50% of principal accounts for loans to micro-businesses. As a Philippine-based entity with an agricultural banking focus, MMF is fully eligible to receive cash inflow in a timely manner. If this doesn't completely cover the shortfall, MMF can expand their deposit-taking services and access a range of international grants from NGOs such as the IMF, and potentially leverage historically low interest rates to take out new debt financing. The combination of these actions will inject the required capital for MMF to survive the short term and place them in a powerful position to grow as they emerge from the COVID-19 pandemic.
The second component of our recommendation is internal innovation, focusing inwards over the medium term to reduce costs by 24% and improve MMF's PESA rating through efficiency gains. Microfinance in the Philippines is increasingly moving towards digitalization, embracing the exciting opportunities that technology offers. However, in the current climate with significant impairments to cash inflows, we recommend that MMF initially focuses on relatively less expensive investments in internal innovation. The present environment, especially ongoing regulatory requirements, such as a currently debated bill which is likely to impose a 60 to 90-day moratorium on loans, present an opportunity for MMF to look inwards to improve internal processes by implementing technology upgrades. This will lead to a number of positive impacts for MMF, including a reduction in operating costs, improved portfolio quality as staff redirect attention from menial tasks towards a client focus, and the collation of data, enabling MMF to make better decisions in dynamic circumstances. We recommend two avenues, cloud-based core banking and a field officer app. Cloud-based core banking is focusing on upgrading MMF's backend systems and processes. This involves moving from paper-based files or on-premise servers to storing information in the cloud. VRL and MFI in India experienced a 50% reduction in portfolios at risk, and moving to the adaptable cloud environment enabled them to rapidly expand, doubling their client base in 2 years. In conjunction with implementing a cloud platform, MMF should also introduce an app for frontline field officers. This would reduce the time spent by staff on admin work, allowing loan applications to be processed more promptly. When Muzoni, a financial inclusion fintech, worked with 5 MFIs to introduce a similar app, there was a 68% increase in productivity and a 92% reduction in turnaround times. This is a key step to enabling widespread technology throughout MMF. By empowering staff with technology skills, they are then able to assist borrowers when client-facing technology is later rolled out. So how would MMF go about bringing in these exciting innovations? Firstly, we considered whether MMF should develop this technology in-house or partner with an external technology provider. There are pros and cons for each option. However, we recommend external partnership with an established fintech that has extensive experience working with MFIs and understands the intricacies of the Filipino landscape. The most important step in implementation is ensuring that staff at all levels buy into the change. MMF should then partner with a technology provider to migrate information to the cloud platform and launch the application for field officers. We have shortlisted 4 fintechs to provide these services and have assessed their offerings and case studies of success in our appendix, and would be happy to address this in Q&A. So now that MMF has the foundations in place with increased capital and enhanced internal innovation, how can they look to grow?
Building Bundles offers group loans to female agricultural workers in Mindanao to reach 252,000 borrowers at a 1.4% default rate while improving the PISO rating. Filipino agriculture has remained relatively stable during COVID-19 and employs about a quarter of the population. The government is seeking to place Mindanao as a hub of agriculture to reduce the country's reliance on agricultural imports. Focusing on microfinance, female clients are associated with less risk, and agricultural microfinance investment is incredibly powerful as it enables the purchase of fertiliser and other capital equipment to scale production. When we consider MMF's goals of growing their female and Mindanao client base, it becomes obvious that MMF should target female agricultural clients from Mindanao. We propose MMF meets the demand of this group through offering packages of group loans, business and sector training, phone banking, and microinsurance. Research into the effects of Ebola on Guinea microfinance institutions found clients demanded a broader range of services, and thus we believe Filipino clients will follow a similar pattern post-COVID. Importantly, the group loan model leverages the high power distance and group peer pressure found in Filipino culture to incentivise repayment, while regular follow-ups via phone mitigate against low repayment. So how will this model work? Marketing attracts a group of 5 to 8 clients who submit a joint application to MMF via a field officer. When approved, a phone and service plan is distributed to the group leader, with funds dispersed via internet banking, which is then converted to cash. The phone enables the distribution of sector and business training and regular updates to field officers. The leader then collects cash repayments from clients and transfers back to MMF. This strategy is predicated upon the availability of having a phone, and while 64% of Filipinos have smartphones, we recognise that MMF's client base are unlikely to, considering their socio-economic situation. Therefore, MMF should provide cheap phones and plans to the group leader, with this cost accrued in interest payments made across the entire group. Group loans offer a value proposition to both clients and to MMF. Clients benefit from the ability to purchase capital equipment, enhance financial and agricultural knowledge through training, and reduce risk through microinsurance. By streamlining client contact, MMF can reach more clients at lower cost with greater communication, empowering female and Mindanao people to improve their livelihoods. This strategy will deliver an additional 137,000 borrowers, taking MMF's client base to 78% female and 53% from Mindanao, all at a 1.4% default rate.
So, what are the impacts of these recommendations? Our first strategy provides MMF with a capital injection of 500 million pesos at a 1% interest rate, allowing MMF to endure the current economic climate, become financially stable by early 2021, and positions MMF to implement its strategies by mid-2021, ultimately reaching 150,000 clients and a grade 1 peso rating by mid-2024. After initial costs of partnership and providing tablets, we expect to see significant cost reductions arising from internal innovation, namely 18% cost reduction in transport and communication expenses, 10% reduction in admin costs, and a 23% reduction in employee expenses. With a retention rate of 83.7%, Building Bundles achieves 103,000 new customers by 2025, 90% of which are women. By targeting women in agriculture, MMF reaches both their goals of having 50% of their client base on Mindanao and 75% of their total borrowers being women. Using a discount rate of 12.5% and key assumptions such as an 83.7% retention rate for Building Bundles borrowers and a 7.3 million pesos initial outlay on technology, MMF will achieve a 5-year net present value of 1.2 billion peso.
Today we asked the question, how can MMF adapt to the challenges of the COVID-19 pandemic while improving their operations and growing to meet their long-term strategic goals by 2025? We have proposed feasible and sustainable recommendations to ensure the longevity of MMF's operations. MMF need to endure, innovate, and compete. Through capital injection, MMF can obtain that short-term liquidity fix. Through internal innovation, they can improve their operational efficiencies. And finally, Building Bundles will achieve that long-term stability. MMF will reach their 2025 initiatives along with an MPV of 1.2 billion pesos. Thank you, and we now open for questions.
So do we just start with the questions?
Yep, absolutely.
Can I ask you a quick question? So what would happen though if COVID isn't a short-term problem? does this fundamentally change the nature or the viability of the actual microfinance businesses themselves? And how would you suggest they adapt?
Yeah, so a lot of our strategies are able to be pushed back if that's necessary. So by ensuring that MMF is able to get that short-term liquidity, whether that is only for the next couple of months or further into next year, MMF could then push back a lot of those strategies. So things around digital implementation, the internal innovation can be done regardless of what's happening on the ground. So that can be started from today. As soon as there's the cash available for MMF, they can start to look to improve their internal operating efficiency. And so with the final strategy with building bundles, that might need to be pushed back if there isn't an ability to physically meet with clients. But we do see that microfinance has bounced back from similar challenges in the past. So with Ebola, there were MFIs in Guinea and also in Sierra Leone. And there's evidence of them, once they were past, I guess, the major outbreak, they were able to bounce back really strongly. And those are the ones that bounced back quickest were the ones who offered bundled products aimed at females, and also the ones who embraced technology innovation while they were able to do that while everything was shut down. So fundamentally, we do believe that MMF is able to weather this storm, regardless of, I guess, how long that impact might be. And there's, I guess, clear evidence of that happening in the past, and MFI is responding stronger than ever.
So then is it fair to say that during the actual COVID pandemic itself, would your recommendation be for them to wear it out and then to implement their operational changes post that, or?
Yeah, so the first aspect of our strategy, capital injection, ensures that you survive and endure through this COVID-19 pandemic. It provides that quick capital injection through the Fill Guarantee program that we previously discussed. Internal innovation can happen during the COVID-19 pandemic, and building bundles is more of a after the COVID-19 pandemic kind of starts to dwindle down.
I have a follow-up question. Sorry, I have a follow-up question on that. One of the things that sort of was missing for me was some sense of the broader economic headwinds that Philippines is facing. So you've proposed innovative bundling products, etc., but whether or not people will actually take up these offerings will depend a lot on what they project their future income potential to be. So if you have a climate in which there's been strong contraction in the overall economy, there may not be such take up. Can you tell me a little bit more about how robust are your proposals to a sort of a worst case scenario where we see a prolonged, perhaps recession going forward over the next 2 quarters or maybe even the next year?
Absolutely. So we think that's a really important risk to consider, the broader economic situation that MMF finds themselves in. So by the nature of targeting our building bundle strategy towards agriculture, we've noticed that agriculture has remained relatively unaffected when compared to the broader Philippine economy. And that is because a lot of these individuals are self-employed, growing and selling their product locally. So the demand for food on these local islands remains effectively the same. People still need to eat in these areas. So the actual industries that we're targeting are in some sense buffered from the broader economy.
Well getting these, they must have thought about this, what they would say.
Go ahead, Dom.
Sorry. I'll continue. So by nature of targeting the agricultural sector, we are able to potentially avoid some of the broader impact that the Philippine economy is having as a result of COVID. And if that continues, then we imagine that agriculture will remain relatively cushioned as opposed to the broader economy.
I'd be keen to dig into the detail of your second and third strategies, but maybe we'll start with the second one, the internal innovation one. Have you specifically identified any processes that you think are the ones that are low-hanging fruit, easy to deal with right now, and then what does that roadmap look like, and upfront costs, etc.?
Yes. So if we refer to slide 41, so there's not a lot of information available about exactly what the internal processes that MMF already has. But taking the assumption that they're either working with paper-based files or on-premise servers, there's key examples, on 42, showing that partnerships with these type of fintechs in the MFI sector, and especially in the Philippines and also in parts of Africa, have had really important impacts on the operations of these companies. So things like that app for branch offices is something that is relatively inexpensive to implement, given that many of these offices already have their own tablet, or tablets are actually relatively inexpensive in the Philippines. And moving from a very manual processing to a cloud-based platform really leads to operational efficiency and upgrades in these areas. So we're looking at a cloud-based cloud banking platform across MMF to enable data to be collated and system-wide processes. And then off the back of that, that will then enable us to implement something like that field officer app, and also the technology that we mentioned in building bundles around having a phone-based app on a client-facing side to have that technology to be able to speak to each other.
And could you take us through any analysis that you've done around penetration of mobile devices, for example, and what that client uptake is likely to be? How successful is this typically? Or what do you think, how successful did you think this is going to be?
Yeah, so if you could go to slide 81. So we looked typically at the target market. So our key assumptions were that we'd be mainly targeting individuals in agriculture. This is your top left, and most of them being women. So we got a rough estimate of about 16,000 customers. So we took a conservative estimate of 15,000 individuals that we can target with this strategy.
And I guess also addressing the other aspect of your question around digital uptake. So one of the big issues in lots of rural parts of the Philippines is that they don't have access to devices. So a major component of our client-facing strategy is providing a phone to the group leader. So it's something that Dom can expand on further, but we didn't want to make the assumption that people already have technology in these areas. So while there's Philippine-wide statistics around like 64% of Filipino adults have phones, we understand that that's likely to not be the case with the areas that we're specifically targeting. So a big component of our strategy is actually providing that group with a phone. And if a group is like 7 to 8 people, the cost of that phone spread out across that size of a loan is negligible to MMF.
So actually, perhaps building on that. So one side of it would be the devices for the individuals themselves. How are you considering like the telco infrastructure in rural areas?
Yeah, so we appreciate that the telecommunications at the moment in the Philippines isn't necessarily the same as a lot of countries around the world, but there are government initiatives, in fact, that are trying to improve the telecommunications around rural areas specifically, with this overall goal to have a huge connectivity all around the Philippines. So we think that that will really support this building bundles and rollout of the phones to the wider community.
Thank you. And is that in line with your timelines?
Yes, so if we refer to slide 27, so there's already significant 3G cell coverage over the areas that MMF is operating in on Mindanao. And if we also refer to slide 46, yes, there is build out happening at the moment, and especially on the back of COVID-19, the Filipino government is putting a real emphasis on trying to increase internet connectivity and the speeds in these rural areas, as everyone obviously needs to be social distancing. And so it's a really key part of their strategy of ensuring that this is an area that they can invest in really quickly at the moment and build that infrastructure as a way to get the economy moving. So it is definitely something we've considered and is part of the timeline that we're working to.
Great, thank you.
Just as another question back on the internal innovation strategy, how did you all think about the way that cost efficiencies, particularly employee costs, how that sort of gels with MMF's values around financial inclusion? And do you think that the idea of taking costs out in the future really fits with the organization's values?
Yeah, so the idea behind that is by having cost savings in employee expenses, there's the opportunity for employees to really focus on the building bundle strategy, which it looks to target women in agriculture, which is in line with MMF's social goals for 2025.
So we see these cost reductions not as necessarily removing jobs. So on slide 40, there's some examples of similar MFIs in other areas who've used technology as a way to redeploy staff. So as Kira was saying, it can lead to lower portfolios at risk because these staff, instead of spending a lot of time on like really boring menial admin tasks, can then spend more time understanding client needs and really adding more to the social impact of MMF.
To follow up on those costings, what are the assumptions behind that 18% reduction in transport costs? Because all of your innovations are, at least my interpretation, is all conditional on employees being able to reach clients. Once they're there, they can use cloud computing and apps, but that transportation cost itself, it's not clear to me how that's coming down.
Yeah, so if you could go to slide 77. So the general idea behind that is because previously these loans offered by MMF would involve weekly and quite frequent meetings by loan officers with the loan recipients. By having phones in place, that is no longer necessary, and there's still the ability to be in contact with the loan recipients, but there is no need to travel often hours to reach them.
So is there then a trade-off between, are phone conversations likely to be just as effective in ensuring repayment compared to, say, physical one-on-one interaction? Is there any evidence internationally that that might work?
Yeah, so there has been. So studies looking at digital innovation have seen that it provides you with the ability to contact loan recipients through multiple forms of media, be that email, text, phone call. And from that, a McKinsey study found that there was significant improved repayment from loan recipients because there's more likely that you can target their preferred form of communication.
Sorry, I'll just have to interject there. That is the end of question time, but thank you very much, Dingo Consulting. It'd be great if you could just stay in this room, stop sharing. Congratulations once again. We'll now just be allocating the judges into a breakout room to undergo some deliberations.
Out of crisis comes opportunity. How can MMF achieve success in navigating the COVID crisis and beyond? Good evening, esteemed judges. We are Team NCPG and we're excited to present to you our strategy, which will help MMF achieve its objectives. Diving into the root cause, MMF faces both short-term liquidity and operational challenges, as well as long-term vulnerability and sustainability issues. To address this, MMF should firstly focus on short-term sustenance, affecting its social impacts. Post-COVID, MMF should shift its focus to long-term sustainability, where it positions itself to capitalize on future black swan events. As we carefully traverse through this uncertain environment, these strategies provide MMF a comprehensive and systematic approach to optimize cash flow, revitalize operations, exercise future-proofing, and realize sustainable growth. Currently, the most imminent threat to MMF is the problem of low cash inflow and high cash outflow. Operationally, high default rates and disruptive government regulation had a significant impact on MMF's interest revenue. Moreover, current labour force is not utilised efficiently due to low productivity levels. Financially, MMF may face a cash squeeze as banks tighten their loan policies while having to repay its short-term debt obligations. Overall, MMF has implemented measures to secure short-term cash funding and ensure operational continuity during COVID-19 pandemic. Going beyond COVID, MMF will be faced with multiple external threats and growth opportunities. To minimize future threats of a volatile market, MMF needs to improve its current customer outreach and loan offerings by increasing its adaptability to changing business and customer needs. To capture future market opportunities, MMF needs to evolve its operations by increasing its capacity in catering to a higher demand.
To tackle these issues, our first step is to optimize cash flow. Analyzing our current business model, we are highly reliant on local banks for funding, thus exposing us to risk of tighter loan issuance, especially in such volatile times. As such, MMF must diversify its funding sources to soften the impact of contracting financial cash inflow in the immediate term. We recommend MMF to raise debt through a crowd lending platform that allows investors to lend money via investment vehicles in the form of portfolios. In exchange, investors are promised interest returns. Evident by its strong growth, crowd lending is attractive and investors can enjoy high returns while gaining personal satisfaction. MMF's crowd lending platform comprises various portfolios based on business industries. As such, investors will know exactly which community of people they are assisting. Crowd lending is beneficial for investors as risk is spread amongst many investors and returns are fixed. Besides diversifying our cash sources, we also need to streamline our cash usage. Henceforth, drawing insights from industry players, we need to reduce loan quantity and improve loan quality. We must also adapt to changing client needs from financial to utility-based. Leveraging our relationship with MSMEs helps and empower underprivileged communities, improving liquidity and customer confidence. For new loans, we will streamline lending by half and restructure in 2 steps: filter, then sort. Filtering customers by characteristics helps us identify a typical borrower profile who is an existing customer and an individual borrower with a guarantor. MMF can leverage prior customer knowledge to assess and minimize default risks. Following, we sort clients based on the level of societal COVID-19. Outstanding loans are also restructured to allow recipients to sustain operations as well as daily lives, while adding rider solutions like rebates from repaying will increase their effective spending power and incentivize them to repay despite having memorandum to defer payments. All in all, diversifying our sources of funds and offering needs-based products ensures MMF's cash flow sustenance.
After optimizing cash flow, MMF should turn its focus to revitalizing its operations. Currently, MMF's operations are highly reliant on field officers, exposing MMF to higher costs and greater risk. As such, we recommend the use of sari-sari stores as an outpost for loan transactions. Sari-sari stores are neighborhood convenience stores popular for their convenience and community. We believe that they will work with us due to existing links as well as incentives to promote mutually beneficial partnerships. Through a revitalized business model, we can achieve continued operations at greater efficiency. Firstly, to continue operation. Health risks will be minimized by reducing unnecessary physical interaction for MMF's clients and loan officers. Secondly, for greater efficiency. The burden of field officers is reduced by segmenting administration and operation while leveraging on sari-sari in the loan process. So how does sari-sari outpost work? We look at Jamari. For loan repayment, Jamari pays the sari-sari owner and it is then collected by the field officer during his weekly collections. All transactions are tracked through the loan tracking form. For loan request, Jamari will state his loan request to both the sari-sari owner and MMF office for 2 levels of authentication. MMF will then inform Jamari when his loan is available for collection. For loan disbursement, the loan officer collects the money from MMF office and passes it to the sari-sari owner during their weekly collection. The money will then be passed on to Jamari. With sari-sari outposts, MMF can improve operational efficiency while reducing operational risk, thereby meeting MMF's challenges to ensure short-term operational sustenance. So after achieving short-term sustenance, MMF must look towards the long-term sustainability. To position themselves for the future, MMF must exercise future-proofing. MMF currently serves a wide range of businesses which have different characteristics and hence different needs. However, MMF only has one business loan type, which fails to meet the needs of various businesses. This results in lower social impact and higher default rates, which weakens MMF's portfolio strength, making them susceptible to black swan events. By revising our loan offerings to cater to our 3 client categories, we are better able to meet their needs. This is done by adjusting loan terms according to the cash flow characteristics of our clients. Subsequently, we'll review and improve upon the results through stress testing. This improves business continuity planning and financial position, thereby improving resilience.
Adding on, MMF needs to recognize that social and economic impact are mutually reinforcing, which can be achieved by improving this borrower's financial literacy. Hence, we present to you MMF Academy. At MMF Academy, borrowers will gain fundamental business management knowledge and acquire skills to align their strategy with market trends. This will be implemented by first leveraging on the contact established in sari-sari stores. While collecting loans, field officers will also provide residents tailored business advice at the stores. Secondly, as MMF Academy gains traction, professional workshops can then be opened in the various branches for more in-depth courses. This 2-step approach addresses the limitations of one another. providing borrowers a comprehensive coverage of the required skills to adapt to future market trends. Altogether, expanding our loan types and educating customers on business management and market trends ensures MMF's business sustainability against external risks. Beyond just future-proofing the business, our goal for MMF is to realize sustainable growth. Currently, MMF is over-reliant on manual operations, resulting in the lack of control and business flexibility. This can be addressed by digitalization, which will improve both internal and external operations. As MMF lacks expertise in digitalization, they will have to undergo a strategic partnership with fintech firms such as GoBear. This partnership aims to digitalize various key stages in MMF's lending lifecycle. By digitalizing the Know Your Customer process, centralizing the data keeping system, and setting up early warning signs, process efficiency will be greatly improved, allowing MMF to scale up its customer base for growth, thereby ensuring MMF's business sustainability towards internal development. Moving to our forecasted financial impact, our team projected interest revenue based on the interest paid per repaying borrower and the number of repaying borrowers. As such, we forecasted a revenue growth of 8.4% CAGR from FY19 to FY25, achieving their loan portfolio target of 150,000 borrowers by 2025. Our implementation timeline and mitigation to potential risks are as such. In conclusion, we see opportunities amidst the crisis for MMF to emerge stronger and more resilient. Although our recommendations can be implemented independently, value creation can be maximized when executed in tandem with each other. Aligning ourselves to MMF's mission, our proposed recommendations can tackle MMF's long and short-term issues to achieve its objectives. By ensuring sustenance in the short run and sustainability in the long run, MMF can achieve success in navigating the COVID crisis and beyond. We'll now open the floor for any questions.
I've got a question. Thanks for your presentation. Just in terms of kind of the short-term issues with COVID and how kind of roads and transportation have been cut off in the Philippines, how does your kind of operations revitalization plan address that? Because it sounded like it still requires physical presence, even if it's through the convenience store, it still requires the field officer to travel to those locations.
To answer your question, right, even though there are physical interactions between the field officer as well as the sari-sari stores, the physical interaction and the number of times they need to go down is reduced because the field officers do not need to travel to each and every household of the borrowers. And the reason why we cannot fully onboard digitalization in our recommendation is because of the low internet penetration rate within the entire within the entire two cities itself. Thank you.
Adding on to what my teammate has addressed, so in terms of the issues of having the roads closure, without the current MMF solution, where the field officers have to go down to the client's house, will result in zero repayment rates. However, with our strategy, in the event of a 4 weeks quarantine, the clients are still able to go to the sari-sari store, make their payments, and upon the end of the quarantine, our field officers can then go down and collect this repayment from the sari-sari stores, therefore improving the efficiency.
Just maybe one follow-up on that. Just to clarify, the sari-sari stores, do they currently have a relationship with the MMF organisation, or is this a new process and relationship that you would have to build with every single sari-sari store out there?
Thank you for the question. So yes, we do have existing links. Currently, MMF has links with over 19,000 sari-sari stores who are existing borrowers, and therefore we currently have a partnership with them. Thank you.
So right. Following on that, around the sari-sari model as well, they're taking on additional responsibilities. What do they get out of it?
For each transaction that they help facilitate, the sari-sari get a certain fee, and in our financial calculation, we actually calculated a fee of
Sorry, I don't think we can hear you guys.
You're a
Sorry, could
little
you just
soft.
take a step forward?
Yeah, sorry, can you hear me?
Much better, thank you.
Yes.
Yeah, so what do sari-sari owners get in return? For each transaction they facilitate, we will pay the sari-sari owners agent fee of 500 Philippine pesos.
And adding on to that, we see that sari-sari owners may potentially work with us because there is a mutually beneficial relationship. Why? Because as we make sari-sari our touch points into the community, they are able to leverage on that and build their relationships with their customers as well. And so we see this as beneficial for both parties. Yeah.
Right. So effectively in decentralizing the model then, do you see any perceived increase in risk there, and how would you manage that if you do?
Thank you for the question. So in terms of decentralizing, yes, we have foreseen some risk in integrating into our process. So one of the risks would be the risk of fraud. So to tackle this risk, we intend to create a partnership program with them where we have a discrepancy between our loan transaction form. Hi, sorry. Are you able to hear Are you able to hear me?
Yes, we can now.
I'm sorry for the inconvenience. So in terms of the risk for our sari-sari, so based on our risk and mitigation plan, we have foreseen some risks such as the risk of fraud by sari-sari owners. So to tackle this, under our partnership program, we have a 3-track policy where if there are discrepancy between the money collected and the money recorded down in our loan transaction form, upon 3 strikes, they'll be removed from the partnerships. And if the discrepancy is above 300 pesos, they will be required to make reimburse for the difference.
Thank you.
I have a question regarding your plan for the short run. So how the company is going to cover the short run losses due to COVID. And a central feature was this crowd lending idea. And so there are a couple of concerns I have with this. First, what is the incentive for any crowd lender to invest in such an uncertain economic environment, especially in a context where we're talking about a social business where perhaps profit margins aren't quite as large? And a second question is, do you have any evidence in other contexts of such a funding model being effective for an institution such as MMF?
Okay, thank you for the question. Yeah, so here we have in the appendix competitor analysis of various other crowd lending platforms that are currently available for borrowers in the Philippines, and they are open globally as well. And the answer to your first question, whether we are able to gain this funding from the crowd lenders, right? We see the answer is a yes, because crowd lenders are able to, as well as incentivize, they are willing to, as well as able to crowd lend on our platforms. So why do I say they are willing to? We see an upward trend in ESG financing, and majority of these funds flow from first world countries to third world countries. And in the COVID context, we see that people in the first world countries, who are our target audience for crowd lenders, are less disproportionately affected as compared to the third world countries. So they may potentially be willing to be on board with us. And why they are able to is because we enable them to take on the risk with our rewards. So 7% interest rate is based on our competitor analysis, and our closest competitor with a guaranteed return and 9%. However, they require 10% minimum 10K minimum investment, whereas we do not. Yeah. Hope that answers your question.
Just another question on the near-term part of the strategy. strategy around COVID loans involved restricting some of the loan activity. Just talk us through how that best serves MMF's mission in the near term of driving financial inclusion at a point in time when these organizations need funds given what's happening in the economy.
Thank you for the question. So we believe, like many MMS businesses, many other microfinance companies, we will be streamlining our loans and decreasing the number of loans by 50%. However, to ensure that this 50% is properly employed, our new COVID loan strategy based on societal value and economic value will ensure that those who are required the money most will receive it. So societal value on companies such as Sari stores. These companies are companies that provide essential necessities to the communities. As such, they will score highly in the societal value and they will be able to receive funding during this period as well. So by focusing on societal value and economic value, we can identify companies within the communities that require this money the most, and as such, achieve the necessary societal impact despite our decrease in lending volume.
Are we done for question time, or can I sneak one more in?
You can sneak one more in.
Great. I just think would love to hear your broad view on how your strategies align to the 5 core values in general. So I know Alex referred to one specifically, but a little bit more of a broad view would be great. So the 5 values: financial inclusion, gender equality, community orientation, sustainable development, and entrepreneurship. Just like to get your view on how your strategies align to those values.
Thank you very much for the question. Looking at our summary, so as highlighted in the summary, as stated in the case, our impacts address MMS objectives, which they are highlighted in the case. So in terms of issues such as gender equality, financial inclusion, considering these elements, we have also considered how MMF can empower women through our strategy. So our strategy, by focusing on those affected disproportionately, as well as sari owners, which are predominantly female, we are able to empower women, and which is one of the core values that in MMF.
Okay. To add on for the entrepreneurship core value, because currently MMF's business loan requires a minimum of 40K of borrowings. However, it is very unlikely for the small business owners to loan that much and then repay that much, because they don't really they do not have a very high level of financial literacy, as explained in the MMF Academy. So for us, we provide loan strategies with different kind of minimum borrowings, so that will make it more flexible for different kind of business owners to loan the amount of money that they can repay, that they have confidence that they will repay. Thus,
sorry, team and CPG, we're just going to have to cut you off there, almost a minute over. But we just wanted to say a massive thank you for that presentation. If the judges could just rejoin their breakout rooms, that would be greatly appreciated. We have Connie Gamble and the National Affairs team who are here to talk a bit about our publications.
Awesome. Thanks, Angus. Hey everyone, my name's Connie and I'm the National Affairs Director at MMI. Firstly, if there are any people from the team still in the room, I did want to say a huge congratulations both to you and to the GMCC team for just getting to experience so many diverse perspectives to such a human and social impact centered problem. But what I'm here to do is to quickly give you pretty much a rundown of the publications that we do at MMI, just because they are one of the many ways that we try to get involved in that impact space and provide a platform for people to really, share stories and offer some insight into what impact can really look like. So what Angus has up on the page at the moment is the cover of our Impact Review 2020, which is a pretty exciting publication, although I am definitely biased. pretty much what the impact review seeks to do is combine just voices from anyone who's pursuing impact. And I think what can be really daunting sometimes is when people say they want to pursue a social impact oriented career. You have no idea what that means, and which is totally fair enough because there is no one pathway. And this year we chose the theme of sustainable development. And in the same sense, I think sustainable development is one of those buzzword terms that can really lose its meaning quite quickly if it's thrown around enough. And you start to really lose, I guess, a vision of what sustainable development really is and why do we pursue it and how do we pursue it. And what's really special about the impact review is that it's people and it's organizations pursuing sustainable impact in whatever way is relevant to them, whether or not they're based in Melbourne and they run a social enterprise, which to the Melburnians here, you might have passed hundreds of times on Brunswick Street. I'm talking about Homie at the moment. But I guess what's harder to see is that behind that storefront, they are running youth empowerment programs that are offering young Australians experiencing homelessness, pathways into a job market they wouldn't have otherwise had. And that's not to say government's not filling that hole, but it's just to say that they've identified, people who can receive help and they're doing what they can to make a change there. I think that's really special. But whether or not it's them or it's, a global not-for-profit who's working to create water, sanitation, infrastructure all across the world because that's their goal. They see that problem and they're just trying to pursue that end goal to just, make the world better for the people. And that's such a cliche, but it does still have its power. And, make the world better in that specific way. And what did I want to talk about? Oh, yes. I think the one final thing that's so special about the impact review is our focus on young voices. I think maybe for some of you who've opened it, you might have found it a little bit odd that we have student societies alongside, leading corporate firms. We have Carney and Bain, Deloitte. I think maybe it's weird to see young people published alongside them, but I mean, with things like sustainable development, especially in light of climate change, which is such an intergenerational issue, hearing those young voices is so critical and I think really empowering for us as well to see these people, publishing and, sharing their perspectives on everything that they're doing. And I'm going to quickly wrap up if I can jump to the next slide. On those young voices, the Impact Update is our other publication and it's MMI people and it's also, comprised of other writers who are guest writers and sharing their own perspectives on impact. Ultimately, the goal here is just to share a lot of individual insight as well. And I think that's really powerful. Sometimes it's really refreshing to just look at the data and that's a really easy way to see like the objective problem, but the end goal here is for us to share some stories and that's really special to us. Anyway, that is all from me. I'd highly recommend you check it out, but otherwise I'll pass it back to Angus.
Thank you for that, Connie. And as was helpfully shared in the chat, you can access all of those publications via our website and through those links. Highly recommend checking out. There's some high quality publications there. And as Connie mentioned, the absolute array and caliber of the partner organizations there, as well as the sponsor firms that we got on board. It was incredible and does show that even as students, that a tangible difference can be made. But on that note, I would like to welcome our final team for the evening, Mirage Partners.
MFIs have served as the bridge for small businesses to have access to capital. Now, more than ever, these businesses need this capital. Good evening, judges and everyone. We are Mirage Partners, and today we're excited to share our care strategy for MMF to care for these businesses.
MMF has played an essential role in empowering the underprivileged in the Philippines. However, the COVID-19 pandemic challenges both the capital and client-facing fronts of its business model. These prevents MMF from achieving long-term goals of financial sustainability and delivering social impact. Thus, MMF must develop short-term responses to deal with the adverse impacts from the pandemic while keeping in mind the long-term goals of financial sustainability and social impact. Analyzing MMF's fund flows, we review 4 key areas of focus that must be addressed for it to stay afloat and achieve its long-term goals. Firstly, MMF faces limited upstream funding from banks. And next, in its service to clients, MMF's over-reliance on physical forms of engagement has led to unnecessary employee costs. Thirdly, default rates on new and existing loans have increased across the board. And finally, with many micro-enterprises heavily affected by the pandemic, there is an increased urgency to improve clients' business skills in order to deliver social impact. And as such, we believe that MMF could identify key issues by analyzing each area of focus in greater detail to develop targeted strategies to achieve financial sustainability and social impact. For our first area of focus, we have identified that MMF's upstream funding comes only from banks. However, we see that individuals and non-banks represent two untapped pools that MMF should approach to increase its diversity of funding sources. For our second area of focus, we see that from recruitment to loan servicing, every step of MMF's loan process is heavily reliant on physical interactions. Hence, during the pandemic, MMF faces limited access to borrowers and suspension of a primary revenue stream. However, the pandemic has also driven adoption of digital banking to reduce physical interactions, and this represents an opportunity for MMF to rectify its business inefficiencies.
For our third area of focus, we see MMF's revenues becoming increasingly risky. Upon deeper analysis of MMF's clients, we see that many of them operate in industries hard hit by the pandemic. This is especially so for Luzon, with over 50% of clients coming from the retail industry. Further analyzing, we see that different subsectors have different characteristics and hence should be dealt with differently. However, MMF's current product offerings are rigid and limited and does not take into consideration these differences. Hence, products should be re-evaluated and expanded. For our fourth area of focus, MMF should consider ways to maximize its social impact to increase the touchpoints in the community. Looking across the industry, we see that there are fractures in the non-financial services offered by Philippine MFIs. On one hand, most MFIs provide non-financial support to clients, yet over 90% of borrowers cite that they are underserviced during the pandemic. Hence, MMF could increase education and engagement efforts to empower these borrowers. To attain MMF's objectives, Mirage Partners proposes for MMF to care. Firstly, capitalize by developing innovative products to tap on new sources of funding. Secondly, adopt a phased digital transformation. Thirdly, re-evaluate current and new loans. And fourthly, empower the underprivileged by introducing a higher quality education with a core focus on women.
Our first recommendation is to capitalize on external stakeholders to provide additional funding for MMF. Our alternative analysis of several strategies show that crowdfunding and the issuance of social bonds rank highly in areas of rationale, feasibility, and cost, and are thus optimal choices to help diversify MMF's funding sources. The debt crowdfunding process that we propose takes place in 6 main steps as shown. A unique aspect of this process is social underwriting, which occurs before loan approval. To do this, a member of the borrower's family or close social circle is required to lend a minimum amount of the loan. This provides other lenders with reassurance that the borrower will repay the loan. Our second method is for MMF to issue social bonds to corporate partners as an alternative funding source. For such bonds, MMF commits to meeting certain KPIs tied to social impact. Should MMF fail to meet these standards, the bond coupon rate will then increase, and MMF must pay more interest to bondholders. This gives MMF access to an additional funding source besides banks, making it an attractive option to pursue. The Securities and Exchange Commission of Philippines has also prompted investing in the social bond market to speed up the COVID-19 recovery process.
Our second recommendation is to adopt digital transformation solution in phases. We recognize that there are no viable digital solutions that can be rolled out overnight. Instead, in the transition phase, MMF could stay informed with borrower situations through landline calls. In phase 1, MMF could onboard customers onto saving accounts and enhance mobility of field officers. In phase 2, MMF could migrate customer data to a cloud infrastructure. In phase 3, MMF could roll out mobile payment services. In this slide, we visualize how the cloud infrastructure can further automate MMF's loan processes. Delving deeper into phases 2 and 3, this could be done by approaching service providers that can aid MMF in data migration. This ultimately increases efficiency, reducing physical interaction between borrowers and field officers.
Our third recommendation is to reevaluate MMF's loan portfolio. This involves a strategic review of MMF's existing loans with our proposed 3R framework to restructure, re-educate, and to review. How can this framework be applied? Firstly, we would split subsectors into 4 quadrants based on the estimated impact of COVID-19 on them and their estimated recovery time, as we established earlier that different subsectors will be impacted differently from COVID-19 and thus should be dealt with differently. For example, the hardest hit quadrant on the top right of this slide will be restructured, re-educated, and reviewed. Next, when looking at new loans, MMF could also simply update credit assessments with new metrics that take into account COVID-19. An example of this would simply be the percentage of stakeholders impacted by COVID-19. MMF could also introduce tailored loans for borrowers in different subsectors. An example of this would be an agriculture-focused loan that has repayment schedules tied to the crop cycles of farmers.
In addition to the insights highlighted in our 4th area of focus, data has specified that the impact of microfinance loans is far higher on educated clients. However, most of MMF's clients are undereducated and are women. Reaching out and empowering these women provides greater social impact. Women play decisive roles in their households and are more influential. Hence, our 4th recommendation is to empower the underprivileged with a direct focus on women. In the short term, training and resources could be disseminated by structured low-tech digital solutions. A mobile helpline could be implemented to offer round-the-clock support. In the long term, MMF could focus especially on our women clients. We want to achieve this by focusing on 2 I's. Firstly, to inspire women. We want women to form peer groups, establish role models, and share best practices. Secondly, to include all women regardless of their financial and social background. Ultimately, we want MMF to be synonymous with female empowerment. When women think of MFIs, they would think of MMF.
With our recommendations, we believe that MMF can achieve their key long-term goals of serving 150,000 customers while expanding into Mindanao, empowering the underserved, as well as getting a Grade 1 PESTO rating by 2025. As shown on the top left chart, we see that with our strategies, revenues will steadily rise, while default rates and operating expenses will continue to fall with further digitalization of operations. Our strategies come together to form a comprehensive package that first provides immediate liquidity and tactics to handle existing and new loans in COVID-19 through capitalizing on external stakeholders and re-evaluating our loan portfolio respectively. Following that, we also foresee a progressive rollout of our digitalization strategy, while emphasis on empowering women, which is our last strategy, will be something that will be done throughout, as it is a central theme for MMF. Hence, with MMF Care, we believe that you will continue to serve the underprivileged well through COVID-19 and achieve your key long-term goals of financial sustainability and social empowerment. Thank you.
I'm happy to kick off question time. Thanks guys for your presentation. I thought it was really great, well structured. My question is around your digitization strategy. You very rightly noted that a lot of these transformations and the digital shifts take a long time. But I also noticed that you didn't flag anything in particular that addressed physical distancing right now and the opportunities there are as COVID is with us. So can you elaborate a little bit on what the thoughts are around digital now in the current COVID environment?
So we recognize that this is a key risk because essentially what we see is that phases 0 and phase 1 could be extended. So instead of focusing on digitalization, what we're going to focus on is to onboard customers onto saving accounts and also to lay out paperless applications to lay the foundations. So what we're trying to do is actually to get the country ready for digitalization, get MMF ready for digitalization. Okay.
At the same time, we will also be using lower digital strategies. For example, using frequent phone calls to follow up with borrowers during this transition phase first, before we progress to things that can be more automated in future.
Okay, got it. So what are the risks with uncertainty around COVID and how long COVID's going to last? I'm hearing the current situation in phase 0 could really drag on. So what implications does that have on the 2025 strategy?
Hi, thank you for your question. If I may just maybe take us a step back to talk about our other strategies in place to counter this as well. I think some other things we have in place is to firstly focus on giving the company enough liquidity to tide through this period. And that involves the issuance of social bonds and also setting up a crowdfunding platform which would give them more sources of funding and enable them to stay afloat in this difficult period first. And in terms of how long we think COVID might last, generally, I think that from what we see in the markets, people are getting more optimistic of vaccines, and probably by the end of next year and in the middle of next, the things will get better. And that's the rough timeline that we have in mind.
Okay, thank you. Thanks for your optimism as well.
Quick one from me. So conscious that you've got a lot of new initiatives being brought in across the CARE framework. Now, does MMF currently have those capabilities? And if not, how would they go about getting or building those capabilities?
Hi, thank you for your question. So I think throughout our recommendations, one key aspect that we have to focus on is the upskilling of employees. And this is a central cost that we have accounted for in our model. As we can see in our strategies 2, 3, and 4, it actually is very employee heavy. Our loan officers have to re-educate the people. We have to review our loan portfolio. We have to enable people to open savings account. And in our last strategy, we have to make frequent calls and enable women education. So this is a central expense that we have accounted for. And we think that MMF can definitely upskill the employees to enable them to have such capabilities.
Understood. So particularly in the short term, when you're considering the liquidity crunch, how do you balance the kind of these short-term considerations with what it would take to upskill?
Thank you for the question. So if I would like to just answer the part regarding how our strategies would be, still feasible, even though they seem really novel. So just referring back to perhaps the 2 more novel strategies in our presentation, which is the crowdfunding one, as well as the issuance of social bonds. So for the crowdfunding strategy, we have actually considered different alternatives. So either we could, leverage on an existing crowdfunding platform provider, or we could come up with our own crowdfunding platform from scratch. So our alternative analysis actually shows that leveraging on an existing crowdfunding platform is actually relatively low cost, because we can act as a field partner for that platform instead of having the high setup cost of creating the platforms from scratch. So this overall will reduce the risk of this strategy not succeeding. So this is the part about our novel strategy that we feel actually drives the feasibility.
I have a question on your initial financing plan, a central feature of which is this social bond. It strikes me that this exposes MMF to a reasonable degree of risk. And I think it'll be useful to know what underlying assumptions you're making about the future economic trajectory in the Philippines. And if that trajectory turns out to be worse than projected, how much additional risk are we thinking about in terms of MMF taking on in the near term?
Thank you for your question. So I do with the expense issuance in our group's perspective, we have accounted for 2 key expenses, which is mainly the issuance costs, the upfront issuance costs, as well as the various coupon payments that would come later. as time progresses. Definitely, the key risk will definitely be interest rate risk. And with regards to the specifics of this, we have set out an interest which is roughly in line with what. Sorry, am I lagging? Just to clarify.
I can hear you now, yeah.
Okay, sorry. So just to repeat my answer to your question, we have laid out two key expenses. We have laid out two key expenses with regards to the issuance of this bond, which is mainly the upfront issuance cost, which will be paid off immediately. And next would be the interest expenses with regards to this bond. So in terms of the risk of our social bond strategy, we think that the key one has to do with interest rate payments. And in our strategy, we have locked in an interest expense of about 5% coupon payment, which is roughly in line with what we see other corporate issuers issuing at in the current market. So this interest expense of 5% would be fixed for MMF, and we don't foresee this future.
A question on the cost profile that you talked about before. So you mentioned that to be able to deliver these initiatives, you'd need to keep some level of, like staff to be able to execute. Now, as part of the challenge, there's a cost pressure on your operation, on the operations, given that inflows, are tightening up. So how will you deal with that risk? If you're not able to secure, sufficient funding to cover all those costs?
Hi, thank you for your question. Okay, so should we really, I understand that it seems like most of our funding really comes from, really hinges on the success of our liquidity channels, which is basically through social bonds and through crowdfunding. So should it not materialize, we feel that we should cut expenses, starting with our largest cost driver, which we have identified as through staff expenses. So this could either materialize in a delaying or a cutting of employee expenses. But as much as we can, we don't want to lay people off, because we want our employees to feel that they are valued. And what we'll really be focusing on is how we can upskill these employees to serve more roles, to serve different roles, especially in light of moving towards telecommunication channels and like really delivering the same level of engagement, the same level of services to our clients.
Perfect. Just on time for the end of question time. Oh, thank you for that very much, Araj Partners. We'll just have a quick final intermission, which will be a bit of an overview about the MMI organization, how we've adjusted.
Hey everyone, I'm Ben. I'm the Vice President of Operations for MMI for 2020. I just wanted to start off by giving a huge thank you to everyone who's been involved in this process, whether it be the judges, participants, the audience, or our internal committee who have brought this all together, as well as all of our university partners. This has been fantastic. Just quickly, who we are as an organization, if anyone's not familiar. We are a student organization at UniMelb, and we make a social impact through providing pro bono consulting services to MFIs and empowering students to make a difference. We were founded in 2010, and we're the first and largest microfinance organization established at an Australian university. So this feeds into our guiding principles and our broad statement of empowering and inspiring people to make a sustainable and tangible social impact. And this is really like the driving force behind everything we do, including this GMCC competition itself, where the best answers and best solutions will be delivered to MFIs in need at this time. And it's quite critical to everything we do across these three different areas. And it's just a privilege to work at MMI. I quite love it. And yeah, I'll just pass on to the other execs to talk more specifically about how this mission statement feeds into our organizational goals and relates to GMCC.
Yeah. Hi, everyone. My name is Leonard, and
I'm one of the co-vice presidents of Initiative, so that is our pro bono consulting arm of MMI. Yeah, just before I elaborate a little bit more about the MMI organizational goals, I just wanted to also say a big congratulations and thank you for everyone that's been involved. But yeah, I guess I would say that our engagement with our clients and their communities is one of the 3 core pillars through which we aim to achieve our mission of empowering and inspiring people to make a tangible impact. And since our inception, we have provided pro bono consulting services to microfinance institutions, not-for-profits and NGOs, both at home in Australia and over 10 other countries internationally, including the Philippines, Peru, and Indonesia as more recent examples. And our projects, which include things like impact evaluation and market entry due diligence, have enabled MMI to really form deep connections with our clients and utilize our insights together to help solve really challenging, organizational problems that our clients face, so that, ultimately we can help them to, enable themselves to focus on empowering and reaching those most in need. And this is ever more important this year, as everyone, we are in some pretty unprecedented times. And so we're really privileged and very fortunate to be able to continue serving our clients this year and allowing them to, empower the underserved communities that, they provide their services for.
Awesome, thanks for that, Leonard. I just wanted to start off by saying that I echo Ben and Leonard's sentiments, just in terms of a huge congrats to everyone who participated either as competitors or planners of GMCC. Thank you all so much. So yeah, I'm going to talk a little bit about how we achieve, I guess, impact and empower individuals through the local community. So we try to achieve this indirect impact through our events, competitions such as GMCC, and through effective marketing, so we can further our goal of just making a social impact and empowering individuals to make a social impact in any of their future endeavors. Although this doesn't directly impact undeserved communities like the initiative segment of our society does, we still believe that raising awareness and education are key into creating a more sustainable and equitable world. So a great example of how we at MMI try to achieve this, and the 2 other goals actually, is through our largest event, GMCC. So GMCC is unique in the sense that it focuses on microfinance and particularly always having that social impact focus. So typically the strongest recommendations will be sent to our clients to help them improve their services and hence the communities surrounding them. In addition, we also give local and broader domestic and international students, the opportunity to improve their consulting skills, create innovative solutions that integrate financial sustainability and social impact, and also just giving them the opportunity to present to a range of professionals and academics. Some of our other events throughout the year include things like introducing people to the concept of impact investing. That event is called Impact Investing 101. We have a review of it on our website. And we also hold it once a year. We also have another event called Careers in Social Impact, which is a panel event with a group of individuals who have either pursued a career in the social impact sphere or work in a corporate field. So yeah, that's it for, I guess, how we achieve our goal through the local community. I'll now pass on to Faith.
Hey everyone. So continuing on what was both mentioned by Leonard and Nina, our organisation holds a really awesome range of academic backgrounds and disciplines, ranging from design to science to humanities to commerce, at both an undergraduate and postgraduate level, alongside diverse cultural backgrounds and passions for a variety of social impact issues. And this is also pretty reflective in sort of our organisational value of connecting to the wider social impact space as well, whether that's sort of in our local university communities, but also more broadly in a domestic and international capacity as well. And it's one of sort of the key mechanisms in which we also extend upon our understandings of financial inclusion and microfinance, which we think is really important when understanding such multifaceted, impacts. So as Connie mentioned earlier tonight, some ways we do share ideas and connect to the wider social impact space is through our periodical and annual publications, and as Nina just previously outlined as well, through our collaborations with partner universities and organisations as well, to really encourage those intersectional perspectives. And again, echoing exactly what the rest of the execs have said, we're really, really fortunate in MMI to be surrounded by such passionate and inspiring people who really care about making a sustainable and meaningful impact, as we've seen firsthand tonight. So on behalf of the exec team and also the GMCC team as well, we really hope you enjoy the remainder of the night and the closing of the competition. It's been really awesome to see so many people getting involved, as Nina mentioned, in the planning process as well as in participating as well.
Thank you for that, Nina, Faith, Ben, and Leonard. Much appreciated. And I think I speak on behalf of all of them. If anyone does have any questions about the MMI experience, we're always happy for a chat, as well as, any of our upcoming events, including the ones that Nina has mentioned, and access to consulting, which we highly recommend people attending. So, all right, it looks like our judges have returned. So just to quickly wanted to say a huge thank you to all of you for attending, to Han, Vanda, Laura, Alex, and Dr. Rashad. I was mentioning just earlier, but all of these events wouldn't be the same without you. It's great always getting your industry expertise, as well as the genuine care that you have for teams. I'm sure they all appreciate, while you're asking challenging questions, the idea that you are respecting and I guess ultimately doing justice to the presentations that they have compiled is always something that's always held in high regard. But without further ado, I'll hand over to you to announce decisions, as well as give some feedback to all of the teams. Thank you.
Thanks, Angus. We're going to start with some feedback for each of the teams first before Vanda rounds out for results. So for the Unimelb team, we're going in presentation order. So for the Unimelb team, firstly, congratulations, well done on a really great presentation. The case is quite complex, and so you did a really great job of breaking it down into the composite parts. We felt that your short-term strategy around the government grants was particularly good, and what it did was also highlight that piece of information that was eventually missing from the other presentation. So well done there. Something to watch out for is the pace of your presentation. You guys clearly had done a lot of work and wanted to carry that across, which was fantastic, but it was really, really fast. And we also felt that some of your strategies lacked a little bit of balance in the long-term and the short-term considerations, which you guys were asked to consider in your brief. But overall, fantastic job and really tight presentation, so well done.
So I'll go next with the second team who presented today, Coldstream from the University of Sydney. Congratulations to every member of that team. I thought that was a really nice presentation. It was very well structured. I particularly liked the provision of the economic context that the Philippines is going through, and I think that's an important part of the challenges that MMF faces. And I think you did an excellent job in talking about that economic context. And you also did a really nice job trying to incorporate the lessons we learned in the sector from the global financial crisis. I think overall, so that was a really nice touch. In terms of things to look out for, I think maybe a better integration of your plan with the organization's sort of broader mission statement would have been useful, but I think, but that's just a sort of small point. I think overall, I think it was an excellent presentation, and all of you should be very proud of what you achieved today.
Thank you.
Thanks, Rashad. And I'll go next and share some feedback for the team from NCPG. Again, a really fantastic presentation. And what we really loved about this one was that the answer was really grounded in the local context. We thought that driving growth through the Sari network would both really fulfill MMF's mission whilst also acknowledging the reality of on the ground in the Philippines. And so we were really pleased to see that. We would say that a couple of things to sort of look out for or to think about. One is perhaps a more aspirational long-term answer around operational excellence that could have used digital to a greater extent, particularly thinking through the operational complexity that would come out of the thrust of your answer. And then a couple of points just to bring up a little more clearly. One was the implementation timeline, which we felt was somewhat skipped over in the presentation. Otherwise, the presentation was very well paced and well structured. And then the second was that the values of the organisation were somewhat buried in the appendix. So particularly around female empowerment, we thought you had a great point to make there, but it was buried down in the appendix rather than the meat of the document. But otherwise, a really terrific presentation and a really compelling answer. So well done, guys.
And finally, to round out with Team Mirage, look, overall, great framework, well-balanced solutions. So between the short term and the long term, particularly the digitization, so phased digitization, acknowledging the challenges that it would take to ramp up there. So well done on that. On the watch outs, it would probably be mainly around the implementation. So considering how you would do something in such a liquidity challenged market, you responded well to the challenge there, but in future, thinking through that beforehand. So without further ado, unless someone stops me now, I will announce the results in reverse order. Well, firstly, congratulations, everyone, right? There were great presentations. It was a challenging case. Like how do you deal with such a situation that's also everyone else is currently dealing with right now? So well done on that front. In fourth place, we had the University of Melbourne, so Team Dingo. In third place, we had Team NCPG. In second place, we had Team Coldstream, which means our winners were Team Mirage. Congratulations.
Thank you.
Thank you.
Yeah, so congratulations Team Mirage, to all the teams who will be in touch with your prize. But yeah, we won't hold anyone any longer. So thank you once again. Feel free to say a few words if you would like, Team Mirage. Your offer's on the table there.
Thanks everyone for organizing the competition. I think it was a really interesting experience. I don't think any of us have had any experience looking at microfinance institutions. So really interesting case, and we really thoroughly enjoyed the experience. Thank you everyone for attending. Thank you for the organizers for hosting, and thanks for the judges for taking the time out to critique our presentations. I thought the feedback was very helpful for us. Thank you.
So as previously touched on, as first prize winners, you'll be winning $1,000, and the top domestic team in University of Sydney will be winning an internship interview with Kani, which will take place over the next few days. But on that note, I'd just like to say a huge thank you to everyone that came along once again, everyone that helped out with organising, and once again to our sponsors and partners who this wouldn't have been possible. So Kani, evidently the name sponsor of this event, as well as Han and Vanda, their representatives this evening, and our other judges today, Laura from Deloitte Digital, Alex from McKinsey & Co, and Dr. Rashad from the University of Melbourne. But on that note, we bid you all good night. Please keep in touch, whether that's through our publications or through our other events we have coming up. But to all the teams, we will be in touch soon regarding next steps. But thank you, everyone. Good night.